backed and powered by 150 years of business experience. Venue is a virtual data room trusted by the best of the Fortune 500 to move deals seamlessly from one to the other to the next too.
Over the past 6 months, there have been multi-billions of dollars in deals involving dozens of companies in the midstream or infrastructure part of the oil and gas industry. Several deals stand out in this mass consolidation. Kinder Morgan's purchase of 3 of its affiliates for $70 billion, Enterprise Transfer Partners' acquisition of its affiliate Regency Energy Partners for $18 billion, Enterprise Product Partners picking up Oil Tanking Partners for $6 billion, Targa Resources Corp and Targa Resources Partners buying Atlas Energy and Atlas Pipeline Partners for $7.7 billion, and Tesoro Logistics buying QEP Resources midstream business for $2.5 billion. Today we'll discuss some of the factors driving M&A in this sector. Welcome to today's first installment of Merger Talk. My name is Mark Aiello, Vice President General Manager for R.R. Donnelley's Venue Virtual Data Room. Today I'm joined by Ali Akbar, Managing Director from RBC Capital Markets. Ali's focused on midstream and oil field services M&A. Ali, thanks for joining.
Good to be here.
So the first question I have for you today is, last year, how big was the energy M&A market? What portion of that was the midstream, please?
So Mark, the total dollar volume for energy M&A last year was about 230 billion, 240, and midstream was about 140 billion of that. So that's about 60%.
Okay. And in today's environment, how are MLPs supposed to act? And are we going to see the same multiples, the same that we're seeing right now?
Yes, so a lot of the deals you mentioned in the intro were MLP to MLP corporate deals, consolidation transactions. So, to answer your question, I think we'll have to take a two-pronged approach to that. The MLP mergers, which is one kind of transaction these folks undertake, and the other would be asset acquisitions. And both play a very major role in the midstream M&A market. On the MLP consolidation side, I would expect that trend to continue. A lot of the factors that contributed to that trend in recent years, there were about 11 MLP transactions in 2014. There were about 5 in 13. So a lot of those factors still are relevant today, even in this low commodity price. The smaller guys want to get bigger. Folks with not as sturdy balance sheets want to become stronger. And by doing a unit for unit or stock for stock transaction, these basically join forces and their balance sheets become stronger, and geographic footprint becomes larger, and there are synergies to be had, of course. On the asset side, these assets are a derivative, or asset transactions, which are basically privately funded companies, which are then, once they grow to a certain size, are de-risked. MLPs acquire them. I would say that on the asset side, we'll see a little bit of a decline in volume. These generally account for about 40% of the total dollar volume. If you take out some of the MLP consolidation, big deals that skew that number, but about 40%. So I would expect that to maybe ebb a little bit. Because low commodity prices, it's hard to basically put capital to work when you're unsure where your customers, the producers, how they're planning for their capex, because the midstream guys, as you know, transport and basically deal with hydrocarbons once they come out of the ground. So what I would say is that on the asset side, I think you'll see that dollar volume decline. On the MLP consolidation side, the mergers, I think you're going to see that continue.
Thanks. And Ali, what's your expectation for overall M&A activity levels out of the midstream this year?
So, like I said, last year was about 140 billion. That had the big 70 billion Kinder Morgan transaction in there. What I would say is that, when you normalize that for such large transactions, we see the midstream M&A to be about a 40 to 50 billion dollar deal size. And I would expect that would probably continue on in 2015. We have already seen a couple of big transactions in the space. The Kinder Morgan acquisition of Highland was one, and the Energy Transfer acquisition of its affiliate Regency was another. So I would say you'll get up to about 50, 60, that kind of normalized dollar volume. But if the mergers, as I said, if you see a couple of big mergers, then that might skew it much further higher up.
And Ali, can you speak a little bit about the differences between how sponsors and strategic players approach the oil and gas M&A market?
Sure. So the sponsors serve a very important role in the midstream M&A space. So I was talking to you about the assets and large corporates. So on the private side, it's the sponsors who typically provide the capital for private management teams to go out there and set up assets. So they basically get the money from the sponsor, and they go and develop assets from scratch. They do all the research. They figure out where there are gaps in the offering for the E&P producers. They go basically get contracts and then go develop assets from scratch. Or sometimes they acquire small assets and build them. And then they, of course, sell those assets when they get to a certain size, when they're attractive to the MLPs. They sell those assets to MLPs. So the sponsors typically are generally incubators of assets. They develop those assets and then sell them to the MLPs. Strategics, on the other hand, are typically buyers of those assets. Mm-hmm. So we have this nice equilibrium, nice balance in the space where the riskiest part of the capital is provided by sponsors who are typically looking for 20% plus returns, and MLPs whose returns, risk appetite and return thresholds are lower. They typically buy assets from them once they've been de-risked and developed.
I see. Ali, where are we seeing successful integration strategies play out, and what should buyers keep in mind when they're conducting due diligence?
So Mark, for the MLP buyers, these guys are such serial acquirers of assets that they have become extremely adroit at buying and integrating assets. So for them, I think making sure that the cultures are similar when they buy other MLPs and get all the employees roped in, and basically doing their diligence, which is, by now they have it down to a T since they bought hundreds of assets the last few years. On the private side, for private asset side, because a lot of the value of the private assets typically depends on what their growth plans are and what kind of a ramp up that growth is on, I expect buyers to focus on diligencing a little bit more on the producer drilling plans and how those volumes of hydrocarbons are going to shape up over the next couple of years, and then pay up based on that. That should be an area of focus for them.
Ali, thanks so much for your time. And thank you for joining us. For more merger talk, visit thedeal.com.